Welcome back to Halftime Report on CNBC-TV18. Well, for now, let's focus on the aviation sector. CAPA, which is, the Center for Aviation, has come out with a release on how the aviation industry could shape up in FY24. Kapil Kaul, who's the CEO South Asia at CAPA, joins in now to give us more details on what he expects this time from the industry. So in their report, they do say that they expect domestic traffic to increase by 20% year-on-year and international traffic to increase by 22 to 27% in FY24. So it promises to be a very good year. Kapil, thanks a lot for joining in. Before I talk about, what the year to come will look like, I also noticed that you're talking about how the P&L of these companies could get impacted quite a bit because a lot of planes will be operationalized in FY24. 100 plus aircrafts were on the ground now because of supply chain issues, and now they'll sort of be operationalized, and that would involve a lot of maintenance costs as well. Tell us a little bit about that. How much could the profitability get hit, and what is the prognosis with respect to players like Interglobe, SpiceJet, etc.?
Okay, good afternoon. Good to be on your show, Ekta. I think we are, after a long time, at a very inflection point in aviation. I haven't seen the industry for the last 20 years. I think we are at a critical stage where we can have a structural shift, and those structural shifts are visible. Now, before I come to the structural shifts, I'll just explain that currently we will close the FY23 year at about 137-38 million passengers, just short of 140, so more or less back to pre-COVID in terms of domestic traffic. But the system demand is roughly around 15 to 20 million more. And that's because of serious capacity shortages. And that serious capacity shortages is primarily because we have about 100 plus aircrafts on ground, and they've remained on ground for a pretty long time. Most of the airlines, in fact, all the airlines have aircraft on ground, and they are struggling to get them back in there. In spite of that, the number of aircraft on ground, we are also expecting that the inductions for next year are going to be roughly about 135 net inductions. So the aircraft on ground and the aircraft that are likely to be inducted over the next 1 year, it's 200 plus. But we recognize that the aircraft on ground are not going to be coming so soon. We expect them to be back in air by June, but it could spill over to Q2 of next fiscal. So you will see most of the capacity inductions from second half of FY24. Keeping the aircraft on ground and their inductions back over the next 6 months, and for the new inductions to come, we expect the growth to be in excess of 20 to 25% for domestic. Coming back to international, I think in spite of the fact that the bilaterals for foreign airlines continue to be constrained, the focus on growth will be led by Indian carriers. Air India will, my assessment, activate in the next 12 to 18 months, roughly 20 plus aircraft, 20 to 30 wide-body aircraft back in service. Some of them are grounded and some of our new inductions. So that's going to power the long-haul and ultra-long-haul growth after a long time. In addition, you will see Air India Express and the Vistara combined expanding on short-haul and regional international routes. Indigo has an exponential growth story going forward, so the growth is positive.
So, you are indicating that there's a lot of supply which is coming through to service the capacity or service the demand which is estimated. But do you think that this amount of excessive demand, which you are estimating maybe a 20-25% growth on a year-on-year basis, is enough to possibly mitigate some amount of the impact of ATF costs, which are around 45% of the operating costs of an airline?
I think the ATF is a good story so far. Though we have modeled $85 of Brent in our estimates, but it could be around 80 as well. In addition to that, the efforts of the Ministry of Civil Aviation in terms of reduction of VAT, we have recently seen Bombay moving on from 25 to 28 to roughly about 18%. Except 5-6 states, the VAT is now more or less rationalized. The introduction of MOPAG. There are many factors which will keep the cost side of fuel softer than what we saw in FY23. Though even we are, as I said, model $85 a barrel for FY24, but we would expect cost side to be, the fuel side to be moderate. Now, then you add the induction of aircraft like A320neos, A321neos, which are 15% plus in terms of fuel cost. There's some maintenance cost advantages. I would see those will play out positively in the fiscal FY24.
And what about industry consolidation? There are so many new players, there's consolidation happening. How do you think all of that will affect pricing in FY24?
We hope that the consolidation impacts positively, because after a long time, the industry structure is a little more stable. Between Indigo and SpiceJet, we are expecting 75-80% of market share between them. If that doesn't stabilize pricing, I don't know what would. The power is now more between the two big players, and I would expect these two players to price rationally, whilst continuing to give value to the customers, but continue to price rationally. And that will augur well for the other players who are going to hold the balance 25% market share. I don't see the structure of pricing going back to pre-COVID. Even though the capacity inductions from second half will be very, very high, that will impact yields. But I would expect that the pricing will reflect strategic intent of profitability, both by Indigo and by Air India, which will augur well for everybody else in the industry.
What is your sense, Kapil, with regards to how Air India could specifically perform going into next year? It's probably going to stabilize its feet a little more with the new management. You're talking about 20 to 25 new aircrafts probably being serviceable. They've struck a huge deal, one of the largest in the commercial aviation space, just last month. What is the larger picture, according to you, when it comes to Air India in terms of market share and performance?
So Air India has been lucky, I must say, that they took over and the market structure changed. The demand and supply was different. International, they are doing extremely well. The yields are maybe 40% up, load factors are 90% plus. So they were blessed, actually, that the market structure on international changed significantly. I don't think the story of Air India is around 470 aircraft. The 470 aircraft is just the beginning. Air India had a growth deficit for 2 decades, almost 15 years. So this 470 is largely for replacement. I would expect a much larger order going forward, or very soon by FY26, these options to be converted. Air India's story is about an intent to create a global airline, intent to create an airline of quality, size, and scale that India hasn't seen. There is a clear intent to create a world-class airline. I think the structure that's in place right now augurs well for Air India to reach that milestone. The question is whether it will take 2 years or 3 years, and what are the external, internal environment. But I think Air India is a story of not about size. Size will obviously be critical, but is about creating a world-class airline of size and scale that India and Indian economy would be proud of. I think in that the management intent, and I would say be more than Air India management, it's also the Tata's intent to make this work. So I think Air India is a work in progress, but it is aligned towards making it reach its target of being financially viable and create a global and world-class airline. And I think directionally, it's looking positive.
Okay, all right. We'll leave it at that. Thanks a lot, Kapil, for joining in and speaking to CNBC TV 18. We appreciate your thoughts.